How's it going, everyone? Wednesday, how we feeling? Hope you've made some good trades. Hope your stocks have been doing well for the week. We're halfway through, so I think it's about time I caught up on the market. I missed a couple of days, so I've made a bit of a list with the news that I want to go through, and there's been a lot that's been happening. And I probably won't get to cover everything, but I'll cover some key points. We'll check in with my earnings watch list that I did for the US. So these are just US stocks, and we'll see how some of those plays, or well, I didn't make plays out of it, but how those predictions, my sentiment towards them, we'll go through how they actually turned out, and also cover how the ones for the next couple of days, how they may go. I've changed my mind on a couple of them, so I think it's good if I cover that. We'll also go through some general news, to do with the economy, some interesting things that came out today, the whole situation with China, the way that Australia stands at the moment, and we'll go through some ASX stocks, the Australian stocks, a couple of companies that had a bit of news out. So let's get straight into it, hey? So the earnings watch list we had for Monday, which so a couple of days back now, we had C Limited, a US company. These are all US stocks. C Limited to report on the Monday morning, which is really our Monday in Australia, Monday night. So C Limited reported before open on a Monday, and I had long sentiment towards it. This is a company that operates in Taiwan and some other areas around there, with a few different business segments. I mentioned it on my last live stream about their gaming segment, the Shopee, which is e-commerce, and just trying to remember the last one, some payments platform. So they have like e-wallets and that sort of thing. So I was pretty sure that this company would do pretty well, given that all those business segments, they have a gaming segment as well, that all those big business segments would be performing pretty well given the current circumstances. So I had a long sentiment going into this stock reporting, and they shot the lights out. Like, they did really well. And if I just check in on, I would have posted, so just looking at the numbers here, they reported massive growth in the company's revenue, and it was a beat on the revenue. So $913.9 million of revenue reported versus the $912.73 million estimate. So it wasn't a massive beat, but they just beat it slightly. And EPS, they reported a loss of 52 cents per share versus a loss of 35 cents per share estimate. So they missed on the earnings, but beat on the revenue, and the company really came through with good growth across all business segments. But I was actually surprised that it did as well as it actually did, because I thought that the EPS news would bring it down a bit, because their reporting basically says on the EPS side that they've had to really pour a lot of their money into the business growth in order to get that business growth, and that's why we can see that increased loss compared to estimates. But it was trading up 8% pre-market, and if I just jump back to my sheet here, we can see that it ended up trading up just over 12% on the Monday morning, Monday night, Tuesday morning in the Australian time frames. So C Limited smashed it out. It went the way that I was expecting. And then we had a couple of others that we were watching for after close. So Baidu, and Trivago, which I was long on Baidu and short on Trivago. Now, Baidu I actually ended up making a play on. I was sort of umming and ahhing over it, not sure whether I would do it. I was up early and watching it from about 5 a.m. US stock market closes at 6 a.m. in Australian time. So I was sort of watching it, and right at 5:59 I actually placed a trade on Baidu, and I've just got it here just so you can see. It was right at 5:59, so 1 minute before close, and this stock actually ended up trading after close, but I picked it up somewhere around this 107 mark, and I put $214 or $215 into the play. I set my stop loss so that if it did gap down, I wouldn't lose more than what I put into the play. So my stop loss was set at that $214 loss, if that was to be the case. But I ended up actually leaving this trade really early. So I watched it for the next hour after it closed, and it started to dip, and I thought this might actually go against me. And if I can just see what they reported for their... Yeah, so they released their reporting EPS of $1.25 versus 56 cents per share estimate, and revenue of 3.18 billion reported versus the 3.09 estimate. So it was a double beat. And as soon as that came out, that's when we got this rally back up out of the share. And as it rose, I ended up deciding to actually sell out of this position up. It hit its peak here, and then it started to fall. I decided to sell out of it at that point. I thought that it really probably hit as far as pretty close to where it was gonna run to. And I originally set my limit around 120 or 121, but as soon as it started falling again, I thought, it's not worth the risk chasing that extra couple of dollars out of it on the upside, when really it could have continued to fall back down. And before open the next day, we saw it actually trading back up, and it got to that 120, nearly 121 area. And then once market opened, we saw it fall all the way back down to nearly where I actually initiated my position. So I'm pretty happy with that trade. I think I played it pretty well. Made a $60 profit out of it, 28% return based on my cost into the position, and it closed out within an hour. So I was really happy with that trade. Thought it went well, and made some money out of it. So I can't complain about that. So Baidu ended up going the way that I thought it would. I was long on that stock, and I ended up playing long on that stock. But it actually ended up going back down quite dramatically the following day. And the last one was Trivago, which I was short on. Now, this one rallied really hard before it actually released its its reporting for the quarter. It almost went up 15%, and if you had to open a position at the start of the day hoping to go short, capture that short after close on the reporting, you would have got really hammered. Like that 15% run is quite dramatic, and I wasn't expecting that, to be honest. But as soon as it did report, we started to see it fall after hours, fell 4.2%. So pretty much reacted to its reporting as I was expecting, but I wasn't expecting to see that 14.5% rally before it released its information there. So I guess you call that half a point on that one, but not too bad. And so we got a few more stocks that reported yesterday. So Walmart on before open yesterday, I was long on it. Home Depot long, and Advanced Auto Parts, I was long on that one as well before open. I didn't do too well calling these ones. I didn't actually trade them, so at least I didn't lose money on it. But Walmart actually, I think it actually traded up before open, but then through the day it ended up falling. Home Depot, it was pretty much flat overall as well. Advanced Auto Parts actually surprisingly did pretty well. They had a good report, so got that one right. Home Depot, it did overall go up, I guess, but Walmart, didn't get that one right. So, and then after close, we had NetEase on the watch list, and I was long on that one, and NetEase did smash it out with 3.6% up and another 2.6% up after hours. So it smashed it out, did really well, and it's, I was going to be very surprised if that didn't go up because of the way that the business is and how it would benefit from the current situations. Nordstrom, which is a retailer, had that one on there, just the one to watch. I wasn't really sure on which direction that would pan out to go towards, but Nordstrom ended up getting hit pretty hard, so glad I didn't try to go long on that one. I thought that maybe, like we've seen with a lot of retailers, they've ended up shifting across to online really well, and it, if they had have done that, their reporting was a surprise on the upside to a lot of people. But I think Nordstrom was one of those retailers that they've been around for a long time. They're a good retailer when it comes to the basics of retailing, but when they had to try to shift to online and change their business model a little bit, they were a little bit slow to shift. So their reporting wasn't the best, and they got smacked around on the trading of the stock because of it. So we see it down more than 5%. So those were the ones that were on my watch list prior to today, and I thought, go through them, give you the lowdown on how they actually performed and compared to what my sentiment was on the stock. So moving on from that, I think we'll just cover some general economic news. One that I found really interesting today was CoreLogic, their home value index, the daily index that CoreLogic provides on Australian property prices and the fluctuation. They have a monthly as well, but a lot of people turn towards the daily, I guess. Sometimes a month is just a little bit too long to wait if you want to get some info on what the property market is doing. So there's the daily index for that reason. So CoreLogic came out today and said that due to COVID-19 and everything around it, its implications, CoreLogic will suspend the daily online publication of the Hendonic Home Value Index, as we continue to observe material reductions in the volume of property transactions underpinning the index, creating additional volatility in the daily reading. A robust volume of timely sales evidence is a critical component of accurately estimating the value of residential properties. The monthly results of the index will continue to be reported, but should be interpreted with some caution until transactional activity returns to more normal levels. So I thought this was an absolute cop-out from CoreLogic. They've never had an issue with reporting the home value, like the property price changes when the prices have been going up. But now that we can actually see that the prices are starting to fall apart and the price is breaking down, CoreLogic decides that it doesn't work well for them to report those numbers as the prices are falling. Which I think is just ridiculous, and they're blaming the fact that there's not enough volume in actual sales in order to do this. and I've seen many journalists who are, they may have invested interests in property. They probably have a lot of money tied up in it. A lot of those journalists have been, completely head in the sand towards how this situation is affecting property market, and we know that it's having a toll on it when people have lost their jobs, their income's reduced, and people that have mum and dad investors who may have a property, one or two properties that they have as an investment and they're renting out. They if they have people that are staying in those properties and they can't afford to pay rent due to job loss, then they basically have to wear that cost. And some people, a lot of mum and dad investors probably are in the same boat, so it's very hard for them to wear the cost when they may be in the same situation. And the banks have had they've put protocols in place with the not having to make repayments or delaying making it interest only for a certain time frame, and I think that runs out in September. But property prices are going to fall when people can't afford property. It's going to happen. And CoreLogic, they claim that they have this daily index that's fairly accurate to some extent, but really it's always going to be a delay in the price. It's not as though we have the sales in a single day and that same day that information's turned around, given the CoreLogic and published. There's a huge delay in it. It could be several days, could be several weeks. So only days before this had been suspended, we were seeing, and I may as well actually try to pull up this information while we're here, and I'll just see if they won't give us any previous price data either, but I do recall seeing, and if I go on Twitter, I do recall seeing someone posting previous days of the daily price data for reference, and it was up hugely. It's just it gives a fair indication that this daily price data is very inaccurate, when only a few days ago CoreLogic is reporting a rally in property prices. It's completely crazy. And I'm probably not going to find it through all this feed here, but yeah, I saw that today. I thought that was just crazy, and them blaming the lack of sales volume because due to that they can't actually produce relatively accurate figures of the price fluctuations. I mean, surely you can have something put in place for that, some protocol, because when there's a reduction in sales volume, that's an indication of a breakdown in the market. So you can't just say that because something isn't normal within the way that the market operates when it is doing well is a reason to not report on the pricing at all, because then it becomes a very one-sided metric. If it's only going to work well when the market is performing well, then it's not a good system. It's just not good enough, really, in my eyes. So complete fail from CoreLogic with that coming out today, and I've seen a lot of people saying the same thing. It's just complete idiocy that CoreLogic, and loss of reputation on their behalf as well, for them to come out and say this, and in the same breath, saying that they still believe that they've been accurately estimating the value of residential property. It's a bit of a head shake moment, really. Anyway, on the next bit of news, we got China placing roughly an 80% tariff on Australia's barley exports importing into China. And they're having a look at other Australian exports as well that are on the radar. So I've got a little bit of an article up here about it. So they pulled the trigger on the 80% tariffs. They were talking about it, and this is, of course, in response to Australia poking and prodding about how China has actually dealt with the coronavirus, and that Australia believes that there should be some level of investigation into how China has handled it and dealt with it. And in retaliation, China has then imposed these tariffs on the Australian barley industry, which a lot of farmers are saying is the breaking point. Like it's basically going to kill the industry with the 80% tariff. So if we read into the details outlined here, it's a anti-dumping duty of 73.6%, which would be levied on the Australian exporters, and also impose an anti-subsidy duty of 6.9%. Both duties would be effective of May 19, which was yesterday, and effective for 5 years. So this isn't something that China is playing with. This isn't like, oh, we're just gonna, we weren't happy about what you said, we're gonna chuck this at you, and it could have been a temporary thing, 3 months, 6 months, or whatever. But they've came out and said tariffs are effective for 5 years. So that's a long time to have this in place, and it they're really a statement that China isn't playing around. And as I said before, the market was worth just under $600 million to Australian farmers in 2019, and they would have been hit with the bushfires. It would have had a devastating effect on a lot of farmers that would grow crops of barley. And these farmers are probably just starting to get back on their feet after all the devastating impacts from bushfires and the drought that we had going on. We just had a decent some decent rainfall the last couple of months, and farmers were sort of saying that things are starting to look a little bit optimistic, and then they're getting whacked with these tariffs. So it could just break the industry completely. I was listening to an interview just before this live stream, and they were saying that a lot of farmers had come out and said that their winter crops, because of this, they just won't plant barley. They'll turn to some other winter crop, grow something else entirely. So it's just not good for Australian farming, agriculture at all, and it's eyeing off other areas as well to continue the pain on the Australian economy. And unfortunately, it's aimed directly towards one of the hardest working demographics of the Australian economy in my eyes. I grew up on a farm, and all these tariffs are aimed towards farmers, and these haven't been put in place. It's only the barley thus far, but it's going to have a really big hit towards or a big hit on the agricultural sector if we then have further tariffs imposed on wine and dairy as some others as well. and I think there were a few other things that were eyed off as well. Coal, I think, was one of them. But yeah, even just wine and dairy alone, your dairy industry in Australia is already, it has been a heavily impacted industry for many, many years. An industry that has been hit by pricing wars from the likes of Coles and Woolies and that, and the drought has hugely affected them. The wine industry, if tariffs are going to be put in place on these industries as well, to the same extent, then yeah, I just don't know where that could end up, because we're looking at a period of economic fallout, and we all know that Australian produce is some of the best in the world, and because of that, often it costs a little bit more, and if we're going through a difficult time economically and household budgets are smaller, then some people may choose imported produce over the Australian grown stuff, and then if the local businesses are struggling due to that, being businesses, I mean the farming industry, and then they also get hit with reduction in their revenue because of exports, the tariffs on exports, then yeah, it's just going to be really difficult for the agricultural industry. So this is still an ongoing matter, and I think we'll see more come out of this over the coming weeks with how China will impose further tariffs. I don't see it ending up in a good place. I think it will get worse before it gets better. And as I said on my last live stream, I don't think the market has priced in this tariff war that seems to be evolving between China and Australia. So we'll see how that pans out over the coming weeks, and I'll continue to cover this because I think this will evolve into a much bigger issue than what's currently or what it's currently being portrayed as. So that was another item on the list for general economic news. Another one is the new US market rallied earlier in the week on Moderna vaccine hopes. They published some news of trials. I think they trialed a vaccine on, I think it was 8 people. And the US market rallied really hard from this. I think it was up over more than 2%. But then we also saw the US market fall last night, so yesterday, also because Moderna then came out and, I don't think it was Moderna, I think it was another party that came out and said that a study with 8 people isn't enough to warrant publishing news that it looks promising. 8 people isn't an adequate sample size to be putting out information that may not be 100% accurate. So the US market fell on that as well. And then going on to some Aussie market news with respect to retail, we saw the ABS come out with news that retail turnover fell 18% in April. So that's a massive reduction, massive fall in the retail market. And it'll be interesting to see how quickly this picks up now that we're just starting to reopen the retailers. People are starting to go out again and do a little bit of that shopping. It'll be interesting to see if that picks up simply because of that, the retailers opening back up, or whether it will continue to sort of stay flat due to the economy more broadly and people being a bit wary of how much they're spending if they're on reduced incomes, or the potential of still future job losses moving forward. So it was an interesting bit of news coming out of the ABS with retail there. So moving on to the Australian market, Australian stock market, some companies that reported some news. So EML Payments provided a market update today, and I'll just pull that one up because that screenshot's a bit blurry. I mean, the presentation slide's a bit blurry, it's a bit hard to see, but I'll just read it anyway. So it was a third quarter, April 2020 business update. So for the 9 months to 31st of March 2020, they reported that gross debit volume, and if you don't know email payments, they provide I don't know it fantastically well either. Josh Day from Profit Invest knows it. I know that he holds it in his portfolio, one of his favourite stocks at the moment. But my understanding is that it's a lot of gift cards. They have a whole system for reloadable cards for salary packaging purposes. New South Wales Health is a customer of EML Payments. I mean, if I go through this slide, probably tells me. So they have a few different systems, for salary packaging, control pay, which I'm not fully knowledgeable on what that is. Enables companies to facilitate finance to consumers through a fully digitized card residing on a mobile device. So they're really revolutionizing the digital payment market, and particularly with respect to employers providing some means of a payment in salary packaging. Like you might get a card that's loaded with so much money per week that you can go and use for groceries or whatever is the arrangement. And we can see that email payments has a lot of big name clients of theirs. So this is a company that, to be taken quite seriously. And I know that they acquired another payment solutions provider. I think it was, I don't want to get this incorrect. Don't want to be saying false information. But I know that they acquired another payments solution provider, and it was a big deal, and really broadens their reach with respect to their business. So what they actually reported was the gross debit volume of $9.83 billion, which is 55% up over PCP. I'm not too sure what PCP is. I probably should know. Anyway, it's up 55%. Gross profit margin of 75.9% versus 73.7%. Revenue of 87.1 million, which is up 20%. EBITDA of 27 million, which is up 24%. And operating cash flow of 27.3 million. So really good numbers coming out of EML on this update, and the stock rallied nearly 12.8%. So massive gains out of EML Payments today. And we saw some news come out of TPG, some further details around their merger with Hutchison and like Vodafone, as most people know it. I'm just trying to grab that information. I've got it somewhere up here. Is details around how the shareholders will actually be, how the shares will work out during the merger. So they basically said that the shares would be 1-for-1. So if you're a TPG shareholder, you'll get one share for every one share that you have currently in the new merged company with Hutchison Vodafone. And for every one share you hold you will get 2 shares of a smaller Singaporean-based or Singaporean, the business that operates in Singapore, which is demerging from Vodafone in the process. So it's a smaller Singaporean operation, which will be listing as their own ASX entity as well. So for every 1 share in TPG that you own, you'll get 2 in that company as well. And they also said that there would be a special dividend, and I read into this a bit, and I think it was they were going to finance that special dividend through additional debt that TPG was going to take on, which was in order to increase their debt level to the agreed upon level for the merged company. So if you're a TPG shareholder, you can expect to get a special dividend through or after the merger process as well. And that Singaporean operation, that Singaporean company will be called Tuas, however you pronounce that. But yeah, that information came out today for any TPG shareholders out there. And the last bit of info, Sydney airport traffic fell 97.5% in April. Not on April, no, but in April. But the private charters seem to have benefited from the commercial airlines not being able to operate. So Allianz Aviation charter revenue actually, they reported their charter revenue to be the strongest in many years, the CEO said. And I'll just find that article down the bottom here. And I was sort of somewhat expecting to see this, and it came to my attention when actually watching Warren Buffett's Berkshire Hathaway AGM, because he was talking about his own private charter, and sort of made me think that, those are still operational, and surely they would probably be getting more traffic than usual because the normal airlines aren't operating to the same extent. So Alliance Aviation Services, they're expecting a $40 million profit in the full year of 2020. And they said they enjoyed substantial increase in demand for charter flights, with its charter revenue the strongest in many years. The additional demand has been driven by social distancing and a lack of availability of scheduled flights by other operators. And Alliance has seen a significant number of new resource sector clients take up charter services, and expects this level of revenue through 2021 financial year. So the stock jumped up on that news as well. So as always, there was a lot more news in the stock market. There's so much news constantly coming out, and I can't cover it all in these live streams. I wish I could, but I'd be sitting here for 4 or 5 hours, and I'm not too sure whether everyone would want to stick around for that either. So in saying that, if you want to be across more of the stock market news and hear things sooner than just my live streams, having to wait to the end of the day, or I normally only do this 2 or 3 times a week. So if you want to be across it more frequently and more up to date than just these live streams, then join the private Discord chat. I keep them, everyone that's in that chat, I keep them pretty up to date with any plays that I'm making personally, and any big news that's happening in the stock market as well. I normally chuck that in the Discord. We have conversations in there. Everybody throws in their 2 cents, and we all celebrate our victories as well when we have a good day on the market. It's just a really good community, and if anyone wants to join that, I'd definitely urge you to do it. If you're into stocks and you want to have a bit of a discussion platform with some other people, then jump on board onto the Discord group. And also we got the Twitter page. I'm pretty frequently updating that with market news. I post the all the US stocks that I watch, or most of the US stocks that I put on my watch list. I post their actual results when they release their reporting compared to estimates on there. So, and I do that within a couple of hours of the information actually coming out. So it's pretty up to date, as well as putting my two cents in there on other stock market and economic news. So it's a really good place to keep on top of things as well. And the Instagram page also, that links in the description for that one, which is more of, I add to the stories pretty frequently with some news, but also it's for a bit more of a laugh. I'll post some funny ones on there, so if you're into that, jump onto the Instagram page. So before I end it though, I'll go across the watch list for tonight in the US market, and these are a couple of the players have actually changed since I did this watch list. So we got Lowe's reporting before market open, so that will be tonight before midnight. I think the market opens at 12:30, so it'll be some time before then. So we got Lowe's reporting, and I was long on this stock, but honestly, I'm starting to think, and having seen Walmart and some other stocks report, Nordstrom, I'm starting to think that I'd really actually be short on Lowe's. I think it'll be another one that won't have shifted to online very well and not do so well really compared to estimates. So I'd probably shift my sentiment towards Lowe's to the short side. And we got Analog Devices reporting before market open as well. And I've got it on the short. I'm actually not too sure on that one how I feel now. I think maybe I'd probably be flat, but I'm just not too sure how they'll report. They provide a lot of small electronic components, and I think that market has probably performed fairly poorly as of recently, just due to businesses not really producing as much, or businesses not operating to the same level as usual with shutdowns. So I'll probably still hold my short sentiment on that one. And then after close, we've got Synopsys, which I'll still stay long on. Take-Two, I'm still long on that one. Take-Two, I think, with online gaming, that's still going to come through. Expedia, I'm still short on that. It's more travel related, although we did see Trivago really trade up hard before it reported, so we might see Expedia do a similar thing. And then just as one to watch, I got the Royal Caribbean cruise lines, and I haven't got a sentiment there on the watch list, but I'd probably actually say that I'd expect to see it jump now. I think a lot of those stocks have been maybe not a short squeeze, but they've been shorted so heavily, and I think a lot of the downside is beginning to be already priced in. And although we won't be functioning to the full extent with respect to travel in the near future, I think optimism will start to get around the stocks in the travel sector as we're starting to see restrictions being lifted. So that's sort of what I'm thinking. The rest of the list I'll leave until tomorrow. I might do another one, but I'll keep an eye on these ones. And if you jump to the Twitter page and follow my Twitter, which the link's in the description of this video, you'll see the actual results of these stocks that are reporting, I'll post those as the reports come out. So if you want to be across that, jump onto my Twitter page. So guys, I think that's it for tonight. I think we covered everything, and yeah, I think that's it. So thanks for hanging in. Sometimes these videos are a little bit long-winded, and all the information mightn't be exactly what you're interested in, but I'm hoping to cover as much as I can within a reasonable time frame. I don't want videos that extend out to 2 or 3 hours, so it's hard to pick and choose what news I'm going to cover. So hopefully I pick some news that is particularly interesting. But yeah, always appreciate everyone that tunes in and listens. So thanks for that, everyone, and I'll catch you in the next video, which might be tomorrow night or the next night, but there'll be another one. So thanks guys, bye.